Hello, Chico Bico C and the Chico Bico D. Today we're gonna do Apple. Time to analyze Apple and see what is going to happen for the next time coming, okay? So, we are looking at the monthly chart and you see there is resistance that we broke but could not hold. So it looks like we're going to come down to $70, most probably $80. Why? Because we are away from the 20 moving average on the 50. Also, if you look at indicators, RSI, you got triple bearish divergence for about a couple of years now. So we'll see how that goes. The squeeze indicator is maxed out. I don't see this going anymore. So what this means to me is just the fall is just gonna be pretty dangerous. Okay, so let's draw a Fibonacci retracement from the real swing. If this is the top, looks like $11 is not reasonable. Let's do another Fibonacci retracement. As you see that we only ticks away from the 3618, and this is on the log scale. Look, we might come down and bounce off $97, $76, or even $50. $50 is still reasonable without breaking the uptrend. Okay, so we have a trend line here that we can hold. All right, this is one trend line you can hold at this area. Another trend line would be this area, which is confluence with the 50 moving average. But this is long term. Long-term traders, investors, whatever. If we look on the weekly chart, the best time to buy shorts or puts is far away now. But from the last swing, you see that we closed below the 200% on the log scale. With linear scale, we didn't reach anywhere for sure, but looks like we bounced out the 200% on the long scale. We broke close below it, so I do believe that there's just more continuation to the downside. $99.77 is a reasonable area. Now, if we look on the daily, you see all these gaps. This gap got filled. Well, this gap was already filled, but you got this mini gap right here that got filled this week, and then you have another gap going, most likely to be filled, down to $96. Right, here's a nice area. As you can see in the log scale, we already broke, back tested, and we have a 3-bar play, I would say, with sell volume. And we look, RSI can still continue on to the downside, I would say around this level, create hidden bullish divergence. So that would give us a continuation to the upside. The same way it happened here, or this low. We made a higher low with more negative momentum. So I think this would probably play out the same. That's why we're stretching down. We have it on the squeeze indicator already, but we'll see how that goes. All right, if we close these and get it off the log scale, it looks like a buying area, right? But I mean, this is only 2 touches. 2 touches is not a really strong trend line. But now if we move the trend line here, we have 1, 2, 3 touches now. It's more of a stronger trend line. Minimum 3 touches to be a trend line. This is a nice area, possible bounce. I would just use horizontal and vertical resistance. I mean horizontal and support and resistance. So I would say this 1618 is an area of support. It can easily come down to the gap or come down, bounce up, and then fill the gap. Okay, that was the daily. Problem with the daily is we broke close below the 50 weighted, no, the simple moving average, and back test with volume, so it's not looking good at all. Now we look at the 1 hour. I like the 1 hour. We might have a short-term bounce. We have a lot of divergence, bullish divergence here. See this? And then you have low lows. So this can be an indication that we might have a mini pop sometime soon. Draw resistance here. We break this. I think we should be moving on to the upside. You see some buying volume here last minute. So I would say that overall we're still in an uptrend from this last low. If we stay above this, we should be alright. Draw retracement. We backtest the 618 and the 786 is confluence with the 1618 fib extension. So I think that that's the best area for entry for myself. Now we look on the 30-minute, or now look at the 5-minute. You have gaps that didn't fill all the way, so we might pop off to 112 area. Most likely not in the short term, but we might have a cross here bullishly, and then we'll see what happens. But now if we look on the monthly, right, we just don't look too good. We just look straight up, and if you see that the 20 moving average on the monthly is at $70, which is crazy, insane. But even if we come down to $70, we still will have a higher low and still keep the uptrend. I think on the monthly we're going to come down to this RSI level with a higher low and still continue on to the upside. Time will tell, but looking at Apple and looking at the QQQ, basically looks identical. So if you look, the QQQ overextended as well. Triple bearish divergence. We'll look on the weekly. The weekly has a better bounce area than Apple. We could bounce off the 255. Best area of support and resistance, or support, would be 235. And I think the 50 moving average might get there. So we might go sideways and just bleed out slowly. Squeeze indicator going down, RSI going down, bunch of selling volume. I mean, it's just not looking good at all. On the daily, I mean, it looks identical to Apple basically. So what I liked about QQQ is this hammer was an indicator to sell or buy puts, big indicator, and you would have had some massive gains. Now we're closed below the 50 on the weekly, on a 50 MA, back test, volume, slight buying pressure, and I think because this could maintain the higher low, because you have a higher low here. I mean, it's a mini low, it's not that strong of a swing, but I think it still can be considered a low, and this low. So you have a higher low, and you have more negative momentum. Look at RSI. This was the best area of RSIs to bounce on the weekly. Every time we bounced, we moved up. Every time we broke, we became bearish. So right now we broke it. Could be very bearish sign. This is another area right here to maintain a neutral position. So just stronger MACD. On the daily, well, this was the daily. On the 1 hour, on the 1 hour we broke major supports, now became resistance. This was another crucial one. See, we hit that 1618 fib extension. Bounce off the 414 3 times. Usually when you test support 3 times and you test it over again, it's most likely to fail. So we failed, closed below it, huge wick, and we might just continue on to the downside. We broke this low, and this was to maintain the higher low, but we broke it. So I think we might continue on to the downside to test 1272 and still might maintain that higher low trend. But overall, it's just looking ugly. Let's look at the dollar, because dollar confluence is needed. As you can see, you have a basically inverse head and shoulder forming. It's not a inverse head and shoulder until it breaks the neckline, and this looks like a slanted neckline. All right, boom, perfect. Measure and move would be around 95.50 if it breaks out from here. But as you see that this is a very bullish reversal pattern. So we're holding support here, and seems like there's buying volume. If this pops up, you know, pretty much SPY, QQQ, and all the stocks would be basically continue on to the downside. Now, if we look at TLT, which is a bond, we also have an inverse head and shoulder forming. So it seems like there's going to be a transition from stocks to bonds to dollar and maybe gold. So if this happens, stocks are overvalued, pullback is needed, and transition to gold, dollar, and bonds. I don't think that gold most likely won't play out because if the dollar goes up, most likely the gold will come down. And I think that this is most likely a fake out for those invested in gold. And I think that there's a bunch of gaps that needs to be filled on the gold. This got filled, a mini gap here, a mini gap here, couple gaps here, another gap here. So, and this huge sell volume is an indication. The symmetrical volume, I mean, it looks good on the daily. You have above the 20 and the 50, but could be a fake out, or the dollar could be a fake out. We'll see how everything goes. But let me know what you think. We'll check it out what happens tomorrow. It's your boy, Slick. Holla at your boy, leave a comment, subscribe, hit the like, hit the dislike, whatever, I don't care. Adios.